Good Friday morning, everyone. We are on the floor of the New York Stock Exchange with Jim Cramer to talk about those jobs numbers. Jim, it was quite a blowout.
Yeah, it was kind of perfect. You got, again, now you had an average of 211,000 job per month for the last 3 months. You don't have a lot of wage growth. Now, it's always important to point out that I wish people made more money. The wage growth not being up that much gives the Fed a little more leeway. Obviously, my friend Larry Kudlow, National Economic Counselor, said doesn't want to pressure the Fed. Obviously, he said privately, he said for himself, that there's no need to go that fast. I agree with that. It's really important that the Fed recognize the second half of what they said yesterday in the notes, which is trade is being disrupted, which therefore should mean that we have to be a little more cautious, and they didn't do that.
I'm glad you mentioned trade because those tariffs are now in effect.
Fantastic piece today in Real Money about the real impact to China and how slow China's growth is, but also there's some numbers that are a little more positive. Eunice Yu's been doing fantastic stuff too for CNBC on China, but I like this Real Money piece, which really kind of set the scene about China pumping liquidity in, because I think they're very worried. My takeaway is they're very worried about a slowdown in their country, which is what the stock market's signaling. So I know that there are a lot of people who read my Twitter file and say, listen, Jim, you're obviously way too bullish. I'm not that bullish. I'm just not saying that Trump is a fool and all of this is going to fail. I'm not saying I don't think that's the case.
That Real Money article is by Malia Bengali, so please go check that out.
There's some really good stuff being done in Real Money right now.
All right, Jim, we're talking about Biogen now. You said on Twitter, if it's up 43, it's not done.
You know, Biogen, here's this story with Biogen. This is a drug that a lot of people wrote off in December 2017 because they didn't have good luck in endpoints for Alzheimer's. A lot of people kind of shocked that after 18 months the endpoints improved. Reversing plaque has been the most intractable of the diseases, the major unmet needs. So this is obviously worth, I think, more than 50 points. There are skeptics. Lorraine comes out with a piece saying, oh, wait a second, could this really be that good? But there are a lot of other, most of the research is very positive today, and that's going to hold sway.
And again, on realmoney.com, Bruce Kamich out with an article on ETFs with exposure to Biogen.
Yeah, very good, very helpful. Now, I know that my friend Melissa Lee was talking about yesterday the idea of playing biotech with ETFs versus individual stocks. I still think that individual stocks is the way to do it, but Bruce's piece is very informed.
All right, Jim, who do you have coming up on Bad Money tonight? What will you be talking about?
I got an analysis of a company that everybody hates that I think is going to shock people. A little bit different take. And obviously I've got my week that was. And I just want to point out, I said a lot of stuff last night about the tens and twos and tariffs. A lot of people felt that therefore I must be very bearish because of what I think about the tens and twos and tariffs. No. A lot of times what I try to do is explain to people why there is such gloom. I think that if you look at the piece I did for Real Money yesterday on Herman Miller, that's a furniture company, and on McCormick and on KBH, you'll see where I am, which is that individual stocks, individual companies are doing quite well. And those are often overlooked because people don't, ever since the ETFization of our stock market, 50% of what the trading is ETFs, individual companies don't mean as much. And what I'm saying is that they still mean a lot to me. Now, you may say I'm a throwback, but I have no choice. I have to do bottoms up because that's what I've always done. I'm not going to start changing my career right now. And the bottoms up is much better. And then the top down from the employment number, I wrote in Get Rich Carefully that I studied every single number that comes out by the government. By far the most important number is the job wage number and job growth number, the employment report. And when it's good, it sets the tone for the next month. Now, we do have earnings, and that can interrupt the tone. We had a piece by Bonnie Herzog today, Wells Fargo, saying that Action Alert name, PepsiCo, may miss. So we've got earnings coming up, but this employment number, it makes it so it's very hard to be a super negative. It's very, very hard. My friend Matt Horwey has been sending me stuff all morning from the Federal Reserve in St. Louis. The numbers are really, really good. The job growth like this is what it should be. The tariffs can interrupt some business, but if you look at the manufacturing If you look at mining, for instance, if you look at just plain construction, these are now really taking hold as the way that the economy is growing. And what's great about this is, first of all, they're not a drag on GDP, unlike healthcare, which has led the economy. But second, they are not, these companies hire people who didn't go to Stanford. And that's very important. I think that trades have been were chronically underestimated by the previous president. Trades, meaning these skilled jobs that do not require going to a great college, are what really is necessary for our economy to grow. And that's what's happening. And it's very positive. I'm not ideological about this. It's very positive. And if you don't think it's positive, you got to go take a course. Take a course in economics, because it's what you need to see in a country that, in order to be able to get 3-4% GDP growth, you have to see this. That's why I don't want the Fed to pull the rug from underneath this economy.
And if you look at the numbers, I mean, the jobs numbers for April and May were revised higher.
Yeah.
I mean,
now look, I understand. I've been saying that financials can't rally. I've been saying that tech hurt by China, industrials hurt by the possible trade wars with autos, but FANG good, healthcare good, Russell good, defensive's good, and there we are.
All right, Jim, we're going to continue talking about stocks. Please join us in our ActionAlertsPlus.com video.